Hello, everyone. So today we are going to talk about applied AI for finance and accounting. So for the first video, I'm going to talk about how the AI was applied to academic research and what's the opportunities and what's the challenges. And then in the second video, I'm going to talk about how the AI was adopted in the industry, particularly financial service industry, including investment companies, accounting firms, and a lot of people talking about AI, but how exactly they're using AI in the industry. So I'm going to end up with the third video. I do observe a gap between academic research and industry relevance. So I'm providing some my own opinion and some learning material, how we can close the gap between the academic research and the industry relevance. So this is the three videos I share with everyone today. So let me start with the first one. So how are people doing in AI research for academia? So I'd like to start with my own background. A lot of people ask me, Sean, how did you start AI research in your career? So originally I was a computer scientist for a while. And then, I'm really curious about news, inflation rate, Federal Reserve. So I moved to a finance and I did my PhD in accounting. So you can see that I kind of have been interested in technology and the business world for a while. And eventually I want to combine the two areas. So a lot of people also ask me the questions like, what's the hurdle? Like when you do AI research, if someone are interested in AI research, what's the hurdle? A misunderstanding normally people have is the hurdle is your programming skills, is your technical skills. I think that's not a hurdle anymore. Maybe in 6 years ago, why that was a hurdle. I started AI research since 2014. So at 2014, why using some models, I have to start from scratch. But nowadays, it's so convenient. You have a lot of functions ready. You have a lot of package ready. You don't need too much code. You just understand what's the package and you call it. A lot of pre-trained models. So my point is, technology hurdle maybe was there 2014, but now it's not a barrier of entry for anyone who are interested in AI research. But what's the hurdle now? I think the hurdle is I identify two things here. One is, can you really identify good questions using AI? Because a lot of people using AI to predict stock returns, using AI to predict earnings. These are very important questions, but these questions are immediately a lot of people are working on it. It's getting very crowded. Can you think about any new questions using AI? And it's novel and it's important. People hadn't think about. So I think that kind of novelty of generate idea is the hurdle. And I had difficulty for myself because naturally I was thinking about how to using AI to predict returns, how to using AI to predict earnings. But once everyone is predicting returns and earnings, so how you can provide new insights to literature and it's not about, like I said, it's not about technology. Um, if someone using model A to predict returns and someone else using model 2, more advanced model to predict stock returns, maybe that's a technological contribution, but economic insights, I don't think that add too much. So the point I'm making here is, for the challenge one, I think the hurdle is, can you use your accounting knowledge and finance knowledge to find some interesting questions that computer scientists cannot think about? That's the challenge, because we have to leverage on our accounting knowledge and the finance knowledge to find some domain implications, not just predict stock returns and earnings, and find something very unique, domain specific questions. We apply AI, something that computer scientists cannot think about. That's hurdle one. I had a difficulty about that. I have to spend years and years to figure out how to find good questions, how to find something unique, not just about technology. So that's the first one. The second one is the interpretation. A lot of people question AI is a black box, and it's a lack of interpretability. I agree with some of that. I feel like even now, you look at the GPT, and we don't know how the model was trained. We know it's transformer based. We know it's self-attention. We know the big framework, but how exactly what's the training sample and how exactly it was done, we don't know. So how exactly we make it a black box as a white box? That's also a challenge for business students, business scholars as well, because we are, as a business scholars, we are not just go for performance. We also want to understand what's the economic intuition, what's the economic insights. So we have to make the technology understood by majority of people. So what I do is I will write this kind of, no matter how complicated the model is, I will write it in plain English and give to my first year PhD to read. If my first year PhD can understand the writing, that means okay. That means I kind of did good job interpreting the model. If only second year PhD understand, first year doesn't understand, I have to rewrite it. So this is two challenges I will just share with you guys. Not programming skills, but how to find interesting questions computer scientists cannot think about, and how to make your technology, even it's complicated, accessible and understood by the majority of people. So this is the challenges I'm facing. And I want to talk about opportunities, like for AI research, like what kind of opportunities we have. So this is my simple classification of AI research right now we have in the literature. So I was a chair for the Review of Financial Studies to co-host Fintech conference. So we received like hundreds of submissions. By reading all these submissions, I kind of see that the papers can classify into three categories. So the first category is using AI as a tool to address non-AI questions. For example, using AI to predict stock returns, using AI to predict fraud, using AI to predict something. So these are the using AI as a tool to answer non-AI questions. This is type 1 research. So what is type 2 research is AI is the question. So for example, you can see that people ask how human can collaborate with AI. When AI is rising, do we lost our job? So these are the type 2, not just using as a tool, but using AI as a question to answer, like with the rising AI phenomena, what's the implication for the society? So you can see that the type 1 and type 2 are different. Type 1 using AI as a tool, but the question is not AI, but the type 2 is AI is the question. So, and more people I see as a type, like a combine type 1, type 2. They're using AI as a tool. Also, the question itself is also AI. So we can see that, you can see the trend. I think like at 2014, when I start doing AI research, like a majority of people are doing type 1. And more people are moved to type 2. And more people now, a trend is people are combine type 1 and type 2 together. And then there's a lot of utility for us. And today I'm going to give some example about type 2, like using AI as a research question, like what kind of question we can ask. So I'm going to explain several of the examples, and then we can see what kind of example using AI as a research question. So let's look at several examples. Like I said, what's the 2014 when using AI as a tool, and what's the research question we normally ask? The research question we ask normally is using AI to predict returns. So and I also have one paper on that, and I want to share you guys what we have done. So we ask several questions in the paper, and but I want to explain what's the background, what we did. So the input of the AI model is we use all the firm's characteristics, price, returns, blah, blah. We use the firm's industry variables. We use the micro variables. We put a lot of textual data. We use the firm's 10K, 8K conference call, tutor, the product images. We use almost every information we can find online for the firm to train a model to understand the company's future stock price in the next year. So then we obtain a machine prediction. And then what we do is we horse race the machine prediction with the human analyst prediction from Wall Street. So we have a lot of elite Wall Street analysts. They are, they have a solid accounting and finance background. Sometimes they have PhDs, so they make a forecast. So we want to see that, can we use the AI forecast, machine forecast, beat all these human forecast, Wall Street forecast, human forecast. So I can share with you guys in the first 6 months, we can't do much. We only beat 30% of Wall Street analysts. These are smart people, elites. They are very sophisticated. They are very good. So the earlier the machine can only beat the 30% of them. But after 3.5 years, we train the model. We do the future engineer. We do the parameter tuning. We train the hyperparameters. We change models. We did a lot of things to make a machine to learn. Like we kind of like educate the machine like from like kindergarten to like college students. So the final model can beat about 55% of human analysts on Wall Street. That's our first question. Can machine beat human? And our answer is majority of them we can beat. But that's not the whole message of the paper, because we don't want to send out a message saying, okay, AI will replace 55% of job on Wall Street. No, that's a very scary message to send in. So we rather, instead of focusing on the 55% of human analysts who are beat by machine, they are surviving 45 human analysts. So we want to see that why some of analysts can survive. What are the skills made them survive? So that's the main message of the paper. That's what we're talking about, the type 1 and type 2. So in this paper, I use the type 1 because we are using AI, using different models to understand the massive form level data, textual data, image data to predict the future returns. That's type 1 research. But we move the type 1 research into type 2 research, which is we're not just stopped while we're predicting the future returns. We horse race the machine prediction with the human prediction. And we want to send the positive signal, not negative signal. We don't want to say that, okay, 55% of human will have no job. That's not the message we send. What we are studying is they are surviving 45 human analysts. What kind of skills made them survive? And can we have our students learn such skills so our students will be the surviving human? So that's the message we're trying to send out from the paper. So what kind of skills make them survive? So I kind of don't have the time to go over all the details, but any of you are interested, you can take out the GFE 2024, the paper we are talking about here. But in summarize, there are three things make a human to survive. The first thing is, if analysts learn machine learning, they are more likely to survive. And the second thing is, if analysts understand the low frequency events, they are likely to survive. The reason is because the machine is doing very bad after financial crisis. Even after pandemics, the machine is doing very bad. The reason is because we don't have many financial crises in the history, hopefully not in the future. And we don't have many pandemics in the history. So the training sample for machine is very limited for these low frequency events. But human is different. Human trying to make inference not by large sample. Human make inference by induction, by logic. So those analysts who are very critical and logic, they can make a better inference from low frequency data, from small sample. So these humans can survive. And the third one survive is the analysts who have great people skill to survive. These analysts with great people skill, they can understand Microsoft team, they can understand Apple's Tim Cooker, they can understand how these executives generate cash flow or cannot generate cash flow. So in summary, we found there are three things kind of help human to survive, and we want to pass these skills to our students. We have to learn machine learning to survive. We have to have people skills to survive, and we have to be logic and critical to understand the low frequency events to survive. And you guys can check more about the paper and a lot of interest findings we have from the paper. But this just showed an example. What's the type 1 research? And move to type 2, you can see that we start with type 1 as the first question, but we end up with type 2 question as my second and third questions. So this is the first study. And then earlier, you guys remember, I was talking about the challenge for this area is not a program, it's not an algorithm, it's about find interesting questions. So I also said in the earlier case, using AI to predict stock returns, like what I circled here, so most of people are doing it. So what kind of new questions we can find in accounting and finance? So I'm going to give you guys another example of my studies, and then we trying to find new questions. Instead of predicting the earnings and the stock returns, as most people do, we're trying to understand out of 10 analysts, we're trying to use the machine to understand the human instead of using machine to predict stock returns. Let me explain a little bit what's the background. So you can see that this is a company. Let's say this is Google. So there are 10 analysts of the Google trying to give a forecast. And the year 2020 March 31st, the Google will give an earnings announcement, and we will know out of 10 analysts who is accurate, who is less accurate. So in my earlier paper, we are using machine learning to predict earnings, to predict stock returns. Like I said, that's the question we can thought about. But is any new question like computer scientists can difficult to find out? That's what we are doing here in the paper, and you guys also can find it online. So what we did is we have the 10 analysts, and we want to use the machine learning to understand this human being and to figure out which analyst we can trust for their future decision, and which analyst we can just totally ignore. So what we are doing is, if you guys can see here, the I is the individual analyst opinion. The alpha is the weight on that. So let's say we have a 10 analyst. So we have a 10 forecast, and alpha is the weight. The weight is the how much we can trust on the opinion. And then we use machine learning to learn alpha. So basically, we use the analyst historical forecast error using the employment, using a lot of analyst individual trade. And we use the firm characteristic. We use the micro variables. So we use machine learning to learn the human analyst individual features and the firm features and micro information to train alpha to see how much we can trust analyst opinion. So you can see that if an alpha is high, that means that someone's opinion we can trust. If alpha is low, that's some opinion we can ignore. And the alpha is dynamic. What does that mean is we cannot just trust each individual all the time. We can trust only this individual at a certain time for certain firm. So take an example. Can you trust me, Sean's opinion on AI every time? No. I only started doing AI, 2014. So if I was like if I was in the high school, if you ask me something about AI, I don't know how much value that would be. So you only trust Sean only if when I'm at the right time for the right topic, you can trust me. The same alpha here, we use machine learning to learn each analyst background and a lot of firm value and the micro values, and we can see that at what time for what firm we can trust this analyst. So you guys can see the more examples, and we can use these for trading strategy. So basically, because we can see which analyst actually can predict, can be trusted. So we can, instead of, in the literature right now, they get a median of 10 analysts as the consensus, as the market expectation. So we only take the trusted analyst as consensus, take them as market expectation, and we have like about the annualized 16% of return if using machine to understand the human. Once we use machine to understand the human, and we know which human can trust, which human doesn't trust. So we get the consensus of trusted human versus consensus of all humans, and the arbitrage between the two consensus is about 16% annualized return. So this is just an example to show that these are the examples. It's very difficult for computer scientists to think about because you need the domain knowledge about analyst background, you need domain knowledge about profession, you need domain knowledge about accounting and finance. So like I said earlier, the using AI to predict stock returns, to predict earnings is something people can normally thought about, but using AI to understand the human, it requires accountants and financial professions to understand what is going on. So these are the examples. And you guys can check more online. I want to talk about another examples just to give a more sense of what is type 2 we're asking about. So in the figure here, so 20 years ago, when firm disclosed news, most of news are consumed by human, very little by machine. But look at right now, whenever a company disclosed something, the information was consumed by machine, not by human. So the question we're asking here is, 20 years ago, manager trying to disclose news to make human happy. Now, managers trying to disclose news to make a machine happy. So what exactly manager doing? So this paper, we're trying to answer that questions. So let's give you guys a look at example. So this is a table from the company's website, let's say Microsoft. And you, as a human, will read this table. This is the code to generate this table. as the code, define what is rows, what is columns, and the machine will read the code. So another case, this is also a company, and you can see that this is Applebee. So the Applebee, this table is also on a website, and this is the code to generate this table. And then, so the machine will read the code instead of read the table. So my question for everyone is, which of the case is easier to machine, and which is the case is easier to human to read? So you can obviously see for both case, reading this table versus reading this table is same for human, right? For human, they're reading the two tables, they're very similar. However, for machine, it's much easier for machine to read this code to get the contents of the table versus read this, because in this one, they have an image. So machine have to first read the code and get the image, and using convolutional neural network to analyze the image to get this table contents. That's very painful to machine. So this is the point I want to make here, which is, earlier the human, the managers only care about the contents of the table. They don't care about how the code was generated. But nowadays, the manager not only care about the contents of the table, they also care about how the code was generated, because the consumption now is not by human. The consumption of the information is by machine. So the manager has to care about how machine is reading the information. So that's just one example. And we also did a lot of stuff in how exactly understand how the managers trying to cater to machine readers. So there are three findings, what we have here. The first finding is the managers start to care about the code I was mentioned earlier to generate a table. And the manager also cater to large language model, because our study was done 2018, 2019. We don't have GPT, we have Google Bird. So the manager kind of make their language style more favorable by the language model available than Google Bird. So basically, the manager want to make a large language model happy. And also the managers also go to the training camp. They want to make their voice and the presentation style also more well received by machine algorithms. So these are the stuff we documented. And we sometimes I get a call from companies. They ask me, Sean, on my website, I feel a lot of machines are downloading our web page. What we should do? I think, yeah, we have some evidence for you, but I'm happy to chat to provide more insights to these industry professionals. So, and I can go more, but I think the time constraints. I will just very quickly just finish one example. And I want to summarize a little bit about how exactly the literature has been done for AI. So this is relatively a new research, because the AI for accounting finance, it's only about more than 10 years old, relative to asset pricing, disclosure, corporate finance is kind of young area, but there's a lot of opportunities and also, of course, challenges. And I want to just use these examples to describe these challenges and opportunities. And and then the last one is the LM, that's foreign bias. What does that mean? So normally, what we do is, as a human, you prefer your home stock than the foreign stock. That's normally, right? That's normally you prefer home stock than the foreign stock. So we want to test on AI. So we have the US AI GPT, and we have a China AI DeepSeek, and we feed them the different stocks. We want to see, ideally, we should see the US AI prefer US stocks, Chinese AI prefer Chinese stocks. So that's normally the case we want to see. But very, very interesting, the AI does not mirror human bias. What we see is we feed the Chinese firms in both AI. We found US GPT AI like Chinese company more than China AI like a Chinese company. That's very, very interesting. So basically, we found that the US AI kind of can favor Chinese stocks more than the DeepSeek. And this only happens for Chinese stocks. When we feed the GPT and DeepSeek with US companies, the two models are very similar. So basically, what we found is, if we give the US companies to GPT and DeepSeek, their prediction are the same. That's supposed to be the case, because the purpose of AI is to make the accurate prediction. So when we feed the US company to the two AI models, they give the same prediction. But when we feed the Chinese company to the two AIs, we found the US company actually like a Chinese company more. That's very puzzling but interesting. So we trying to look into the data, what is happening. So I'm from Wuhan. I know I have to explain where is Wuhan before. Now everyone knows Wuhan. So I pull out the company from Wuhan. I see a lot of news about the Wuhan company and some positive news, some negative news. And then we also give the Raven pack to see what kind of news we have for US for this company. We only find majority is positive news. So that's very interesting. So negative news about Chinese firms stays in China. They didn't travel to the US. That caused the problem about the GPT, the training sample, because the GPT kind of, they only trained by some like the US the news, which and they are missing some like negative news from China. So what do we do is we retrain the GPT with the negative news, and after retrain the GPT with the missing negative news, the two models will predict the same outcome. So this is very interesting because the some of the news bias, some of the news only stays in China, doesn't travel to the US, and that impacts the training sample of GPT. But once we feel the missing negative news, the two model will be the same. So one thing we learned from the exercise from paper, you guys also find this online. One thing we found from the paper is sometimes AI bias is unintentional. We always come to blame OpenAI, we blame developer, we have a bias, blah, blah, blah. But sometimes this is not an intentional bias. This is like sometimes we have like a media bias. The media bias affects training sample and then eventually affects some of the outcome of AI. So it's not a fault of developers. So this is very interesting. Like I said, I was a computer science major before. Sometimes anything is wrong, people blame about algorithm, but it is sometimes it's not about algorithm. It's about information environment. So you guys can see more of the examples. We have papers to analyze the production images. So we don't study without using images about without using the CEO images, without using like a personal images. We're using the production images, product images. So we want to study how AI can analyze these production images and the prototype images to understand the firm instead of analyzing the images of CEOs or CFOs, their facials. We're focused on operational images, so you guys can see more online and other studies. So I want to do a summarization, like a lot of the stuff. So I teach a PhD seminar, many schools, and for anyone who is interested, I love to deliver 2 days PhD seminar, and I will talk about this research and help junior faculty and the PhD students to learn more about AI research. So one question I came often is, how do I generate this idea? So normally the idea is generated for most of people as a full process. We generate the idea from the literature, fill the gap. We generate the idea from the real world by talk to professionals, industry professionals. We generate the idea by having a unique data someone doesn't have. We generate ideas by focus on regulation, your policy, do a different diff. So these are the 4 ways normally people generate ideas. So for me, I just love the approach too. I spend a lot of time talking to industry people. I want to hear their complaints. I want to hear what they don't have. I try to provide solutions for them. Sometimes it will be a paper for me. Sometimes it will be a product for me. So this is how I think make relevant research for industry people, trying to generate ideas from conversation with them, from news, from my industry visits. But how can I kill ideas? I use this 3 dimension to kill ideas. The idea has to be new, no one has done. Idea has to be relevant to industry, to politicians and or policymakers or someone, and the ideas has to have a high quality of execution. So normally I use the 3 categories to evaluate idea. If the idea is not novel enough, I kill it. If the idea is not relevant, doesn't have a broad audience, I kill it. If the idea cannot guarantee high quality of execution, I kill it. So it's very difficult. It's very difficult. Like I said, it's a high challenge to generate idea. So I kind of using this approach to generate idea, and I use this approach to kill ideas. Any surviving ideas, I will, really happy to pursue and trying to provide interesting findings to the audience. So I want to summarize about the literature. like I said, the AI in accounting and finance is a new area only for more than 10 years. So what has been done, what has been not done? Right now, the relatively mature area is if you're using AI for stock returns, stock market, investment, it has been relatively mature. If you AI for lending market, banking, loan, lending stuff, it has been mature. So basically, so many good papers has been produced by a lot of accounting scholars and finance scholars, not just me, many other interesting scholars. They are working on how to using AI to analyze stocks, how to using AI to analyze loans, lending market. So these are the two relatively mature market. So what has been, I think, the new stuff hasn't been touched much. I think a lot of AI has been done for public traded companies. AI hasn't been really well studied how AI can help private firms, startups. That's a new promising area, I believe. And also, a lot of AI was studied for hedge funds, mutual funds, institutional investors. How AI can help household, our parents, our brothers, this normal household, how AI can help this household. It's very new. And also, AI can address a lot of societal challenges. We have a climate issue, we have a supply chain stability, we have cybersecurity issues. AI can address a lot of emerging issues. So these are relatively new topics, but the challenge is data, challenge is methodology, challenge is what kind of executive question. But the good thing is there's less competition in this field. So I think there's no absolutely right or wrong answer. If someone wants to focus on relatively mature area, that's perfectly fine. I think there's a lot of room for us to contribute how AI help investment, how AI help stock market, how AI help lending market. That's a lot of opportunity there. And also there's also opportunity for these new topics, but the challenge is where's the data and where's topic, and familiar with institutional background, these are the different opportunities presented. So, and I want to end up with this slide saying we have so many AI questions for accounting finance. So who should finish these questions? Who should answer these questions? There are two options. Should computer scientists jump in, help us to answer these questions, or should business scholars we kind of answer these questions? I firmly believe it's our job, because in order to answer these questions, we need a domain knowledge to find the right question and need domain knowledge to find the right answer. So the technology is a tool, but it's not dominant. It's important, but not dominant. So I guess as a computer scientist, they are familiar with the tool, but they have lack of background in accounting finance. It will be difficult for them to identify the important questions in the domain, and it's difficult for them to find answer without domain knowledge. As a business scholar, I believe if you guys just watch a little bit more of my video and my textbook, you will be really have the sufficient knowledge of AI to answer these questions. So basically, the point I want to make in here is it's very difficult for computer scientists to answer our question. It's our job. You need a 70% of domain knowledge and 30% of AI knowledge to answer all these AI questions in accounting finance. Once you already have the 70% of domain knowledge, so you can find the right question, you can find the wrong answer. How did you get the 30% of AI knowledge? So that's what I'm going to talk about next. So I will have a textbook to present you guys. I have some like course error to present to you guys. Once you guys read the textbook and study the course error I provide, you guys will catch up with the 30% of AI knowledge, and you guys be able to trying to resolve all the questions I was discussing here. So this is the first video. I'm going to move on to the second video, which is how industry is trying to using AI, and I'm going to talk about that.